All right, so the Fed announced they're going to pause, not only going to pause, they're saying that they are going to cut rates in 2024. So just what exactly will this mean? Let's take the hypothetical. What if mortgage rates came down by 1%? There are other parts of your life where if the Fed starts to cut rates, you will benefit as well. But right now we're going to focus on what does this mean for affordability with buying a home. So what we understand first though is historically speaking, if you look at the chart, as it relates to the history of the Fed funds rate and the history of mortgage rates, one thing is pretty consistent that if they start cutting rates, mortgage rates will follow. So I'm going to take an example for affordability purposes today. And at the end of this, I'm going to show you what that might mean for increased purchase power if that's important to you. Hey everybody, Ray from Mortgage Master Group. And along the way, if you find value in this, please make sure to like it and subscribe for more valuable information about building wealth through real estate. So let's start out with make $150,000 as a household. I'm not going to cheat and say you don't have any debt because in my example, I'm going to use that you have a $500 monthly obligation outside of the mortgage. Now, this isn't saying completely that this is affordable, but with $150,000, if you have $500, say car payment or student loans or whatever that is, and 10% down, that you could be looking at a house just under $700,000. Now that does yield a payment, as you can see here, of just over $4,800, depending on taxes and insurance. So keep that in mind. One thing I want to look at is what happens if mortgage rates came down 1%? What does that do for the payment? So from $4,850 to $4,440, you can see it drops it about $400 a month. Now, that can certainly help with the budget. You could potentially take that $400 differential, invest it, get compounded interest over time, put it back into the personal budget. Certainly things that can help you out to make things more affordable. For those that are curious, I mentioned I would talk about what would happen to affordability if that in turn happens and in that 4,800, you could be looking at a house just under $770,000. Before you go spending the same amount of money, if it's affordable, you don't have a lot of debts, you don't have future expenses that are going to be coming to increase your debt, such as a new car loan in the future, daycare costs, then maybe buying the more expensive home matters to you. However, maybe taking that arbitrage, the difference of $400 a month, investing it, getting compounded returns, makes you feel more comfortable as well. Either way, what we can see here is if rates go down, it's cheaper to borrow and it might bring you some relief on this affordability issue. Thanks so much and make sure to subscribe and like for more information like this.